Google Cloud, customer success organization from the ground up to 350 people, managing over $7.5 billion in consumption revenue. And that consumption model in particular must have taught you something fundamental about post-sales and how that drives long-term value. This is why you should watch and listen to Season 2 of Critical Moments to understand what is changing in the age of AI and how is go-to-market evolving in 2026 and beyond. Hi everybody, and welcome to the next episode of Critical Moments with amazing operating partners, advisors from all across the globe. And today we're joined by the amazing Carlos Granda, who is one of the operating advisors for PE funds globally. Carlos, would love a quick intro and tell everybody who you are and some of the super cool things about your background.
Thanks. Thank you, Stuart, for inviting me. So let me tell you a little bit about myself. I spent 30 years of my career all in post-sales related activities at companies like Salesforce, SAP, Google Cloud, pretty much any aspect of the customer journey, all the way from onboarding all the way to customer support. The last 3 years, I've spent time with private equity firms globally, all different sizes of PE firms as an operating advisor, helping them around all related activities around customer experience, as well as AI. AI has been such a big piece today, and I know PE firms are very excited about how they can leverage AI to optimize their portfolio companies. And so, ready to talk about anything you want to talk about.
Love it. Yeah, I mean, one of the things that stood out, Carlos, when we caught up prior to this session was that you've spent, as you said, 30 years scaling customer experience and success operations at some of the biggest names in enterprise software. One example, Google Cloud, customer success organization from the ground up to 350 people, managing over $7.5 billion in consumption revenue. And that consumption model in particular must have taught you something fundamental about post-sales and how that drives long-term value. So when you started to look at it from the lens of the PE world, what was the biggest shift you saw in how firms began thinking about post-sales, not just as a cost center, which I know a lot of people sometimes see it as, but really as a driver for proper enterprise value creation over time?
It's a good point. Look, in I think the consumption model of pricing around how software companies think about pricing to their customers, it's not necessarily new. It's been around for 10 or so years. I know back about 10 years ago when I was at Salesforce, it was sort of topics they already had started having conversations. But for me, it's, the consumption model actually begins to drive a very different approach and behavior around how you think about your customers, right? It's not just no longer about just kind of keeping the lights on, kind of from a post sales perspective, but you can really transform yourself to a revenue growth engine. And PE firms love that. They love consumption models because it's a better unit economic for them. It's a lower customer acquisition costs. It's a higher net revenue retention, or NRR, better capacity and efficiency, and then obviously stickier revenue, right? Because even, in a consumption model, when you sell something, it's really more of a promise or a commitment that you're going to consume revenue. And so the most important component of that is making sure that that customer begins to consume. So think of it as a utility, as electricity. You don't get a bill for your electrical bill unless you turn the lights on, unless you begin to use power. And so consumption becomes this sort of, you know, limitless potential for revenue. It's not limited to just the users. It's not limited of how many employees that organization has, because that's typically what we've sold. It is really driving consumption model, kind of from a utility model. So it's a great maturity metric that PE firms begin to look at around what is the adoption, what's the usage, and it becomes more predictable for them.
Mm. And then what? So like, how do you take that view into actually delivering enterprise value off the back of it? Like, how have you guided the funds to understand the importance of that based on your experience?
Yeah, obviously, a lot of the software companies that PE own are not in that model yet, right? They're still in the usage model, and so they're definitely exploring consumption models, right? But I think what taught me that it's not just the consumption model. That's more of an economic aspect of it, but it's actually the value of customer experience, right? And depending on the size of a software company, the value of customer experience becomes more important. For others, is not as important. If you're a smaller company, your focus is very much on new logos, market share, growth, and acquisition. When you start thinking about sort of in the middle of the pack or even on the higher end of the customers, suddenly retention becomes more important. So PE firms have thought about, when they think about the thesis that they're building, is what is the value of growing the customer base? Traditionally, it's always been new logos, lots of M&A, price increases, all these great things that drive revenue, top line revenue. But when you start thinking about if your thesis is based on upsell, cross sell, expanding use cases within your customer, suddenly the maturity of an organization in the post sale side of it becomes more important, or it
Mm.
becomes even more critical. And so that's sort of what I've learned through 30 years of doing this. But even in the last 3 years, that you are seeing PE firms that now are paying attention to customer experience. Where before we were just a checkbox of things that they're doing during diligence or even in value creation, now it's a very key pillar within value creation and driving enterprise value. Because as we all know, it's much easier to retain your existing customers than go and acquire new customers.
Yeah, I think it's a really key point. I've certainly seen this shift with the funds that we work with and the large companies, talking hundreds of millions in revenue, over billions in some moments, that are actually saying for the first time that they're looking at expansion revenue and upsell revenue being a higher uh, focus and target than net new business. And that's certainly not something that we've heard too much over the last like 5 years, but certainly it seems becoming more prominent. And are you seeing that? Are you seeing like that there's like more focus at the point of due diligence from the PE fund on these types of kind of aspects, or how are you seeing the maturity of it from the work you're doing?
Yeah, look, the PE firms are getting smarter and smarter as they go. I mean, they've been successful before in our lifetimes, so they've been very, very successful. So they're learning, and they themselves are evolving. And so I do see that as part of diligence, right? So I'll give you one example. So a couple of years ago, 2, 3 years ago, I was doing some diligence for a company, and the company looked strong, right? It looked strong from a new logo acquisition, right? They were growing. It seemed really, really strong, but their NRR was around 98%. So the net retention of their customers were around 98%, which was not great, right? You want to be kind of 110, north of 110%. So they're around 98%. So I was actually invited, right? An annoying little brother. I got invited to the call to work with the sales team and the engineering team to kind of understand why sort of the 98% of NRR was there. And so as we started looking at it, we realized that 60 to 70% of those customers were sort of kind of flat. They had been in the same sort of usage, adoption. We hadn't seen new use cases. Their health score was somewhat sort of neutral. And so as we started exploring that, we sort of broken down into sort of these three buckets. So like which ones were really driving the NRR, the 98%, which was only about 20 to 30%. The other certain 70% were either neutral or they were going to turn. And so suddenly the diligence thesis, the conversation went from like, let's go buy more companies. Let's just go and acquire basically ARR and grow our top line to
Mhm.
start thinking about can we actually optimize the existing customer base? Because there were so many things being left on the table. There was a lot of revenue being left on the table. So working with them, it was more like, how do we put a plan in place, not from a value creation around how do we grow NRR?
Yeah.
Can we get from 98% to 105%? Can we get to 110? Can we get to 120%? Which, based on where they were, the industry they were, it was, for me, it seemed like a no brainer. And I was able to do this in a very short amount of time. This was in like 2 weeks, 4 weeks worth of effort. It's literally just asking a few questions,
Yeah.
addressing a few issues, poking at the right sort of data points. And so, based on that, the actual PE firm began to shift their strategy around growth through new logos to let's actually optimize the organization. Let's build the right muscle, the right motion around upsell and cross sell. And that was actually, 2 to 3 years ago. And literally when I was checking just a couple months ago with them, they've already at 110% already. And their goal now they're setting to be 115, 118, by the end of this year, because they're thinking about expanding and growing. So the thesis for the PE firm was shifted. It was
Yeah.
like the first time there was like this aha moment for them to say, look, it's not just the traditional thesis that we've used is can we go and expand the existing customer base? Are there opportunities for us to grow our own customers who were very loyal to their product? And suddenly shifting that mindset also shifted their investment strategy, their value creation strategy. And hopefully they'll have a great exit in the next, few years.
Yeah, that's amazing. And Carlos, like how like when you look back at like let's specifically dial into the Google Cloud experience where you were literally setting up that customer success organization from nothing. What was like one or two of the biggest learnings that you could pass on to the listeners on like the foundational things or the quick wins?
Yeah, I would say it's not just the Google Cloud sort of lesson learned. I've been grateful to be in lots of technology disruptions that we've been through, whether it was on premise to SaaS or now to cloud, and then obviously even with AI today, is that you'll have to ultimately listen to your customers. I mean, ultimately, they're the ones that truly drive your strategy. I mean, you and I can sit here and put together the greatest business plan ever put together, in our lifetimes by humankind. But it's like at the end of the day, the customers truly determine the direction you need to take, whether you go left, you go right, where should you invest, and unless you're really willing to have customer empathy and listen to what they want, um, that's really where you get challenged. And so back to your question, like Google Cloud or Salesforce or SAP, I spend a lot of time just meeting with customers to try to understand what they need. Right.
Mm,
Because even when I started putting together sort of this plan around building a customer success organization at Google Cloud, I had in mind what I thought we needed, but ultimately, I needed to kind of validate that with customers. So I started meeting with customers. And actually, I started being very open and transparent and sharing, hey, this is what we're thinking about building. This is the value of what a customer success manager will look like. This is how your team can interact with us. This is how you begin to drive value. And in a consumption model, it's even more important because in a consumption model, whether you're Azure or AWS or Google Cloud, you'll sign these major, massive transformational engagements and deals and move lots of these workloads to the cloud. And so who becomes the most important function is the people that are going to help you get onboarded, get the implementation going, begin to that first workload movement into the cloud, because then
yeah,
it just becomes this sort of crazy wildfire that it just grows and grows and grows without stopping it. And so I would say that was be the probably the number one thing is understanding what customers need and then building the skills around it. Because I think that's another thing. It's, people ask me all the time, it's like, how would you build a customer success organization? And my answer is always like, it depends. It depends on your product. It depends on your customer base, right? If you're dealing with lawyers, doctors, if you're dealing with CFOs, they, in some cases, especially in the SMB space, right, in the long tail of a segmentation, they don't have an IT department.
yeah,
So why give them something super technical or, give them manuals or, make the entire implementation, integration, onboarding piece of it super technical. So a Bank of America, a Deutsche Bank is slightly different than working with Stuart and Carlos Surf Shop, right? It's just very, very different. And so understanding your customers, understanding how your product complexity and your product, kind of the adoption journey looks like for them it's really important because then you can then build the organization around it because it is a skill sets too, right? Not every CSM is built exactly the same, and I think your product determines, your customers determine what do you really need.
yeah. So when you know that example of like speaking to customers, what has obviously happened in the last, let's just say, year, 2 years, 3 years with AI is that there is this opportunity for AI really helping with efficiency. And one example is things like call recordings. It's things like, taking the transcript and listening to problems and, whether it's through CRM or there's a report being generated. What are some of the kind of tactics that you're recommending to PE-backed companies to find the balance of like leveraging AI, let's say specifically around customer success, versus still needing the human input and still needing to like guide on the questions and to be there and to be ever present? Like how are you thinking about that with your experience and those shifts that are going on?
right? I mean, AI is just sort of all over the place, and it has both its benefits and it's actually a little bit of its downside as well. Because when I talk to CCOs, or CFOs or CROs or CEOs for that matter, they're bombarded by AI companies who are pitching them that they are the holy grail, right? That they have that silver bullet that is going to fix everything for them, right? And at the end of the day, they all can somewhat do the same thing, right? It is truly just data integration, automation, be able to bring intelligence and insights, render this content and provide recommendations that you can then go to your customers and do that. We've been doing or trying to do this for prior, even before our lifetimes. I mean, that's what everybody's trying to do, is to get the data. But I think today, the challenge is that because of AI has now reached, you know, mainstream and everybody's trying to use it. I mean, there is no magazine, there's no article, there's no post, there's nothing that does not speak about AI. And so a lot of companies are bombarded by the information. And then obviously private equity firms are constantly looking to drive optimization. It's going to continue to get better, right? So I'm not against AI. I think we just need to be thoughtful and responsible, because I think AI needs to be not AI or humans, it's got to be AI and humans. You still need a human accountability, especially when having to make some certain decisions.
Yeah.
Because I don't think AI is, it may get there and it'll continue to improve, but it's never going to be 100%. It'll get you 70%, it'll get you 80% there, but it may not get you there all the way. And so you do need a balance of ensuring that you have a culture of an organization that is ready, right?
Yeah.
Like organizational readiness and maturity around how to consume this. It is super important. You don't just throw AI at it and expect it to just solve everything, because it doesn't. I'm going to give you one specific example that actually drives this. So I was involved in a GRR kind of get well plan with a firm, and I was trying to help them understand, like, why is churn such a big issue? And what they came back to us is because their AI model had built it for them. They said the number one reason was price increase. And suddenly all the tactics around price increase was started to be put in place. And I'm like, I don't know. Typically, I mean, you and I don't leave a restaurant just because of price, right? It's either service was bad, food was bad, the entire experience is bad. Like if you go to a nice restaurant, you expect to pay. So it is, in my opinion, it's always value, not just price. It's an excuse, but not the actual symptom. And so as we were looking at that, assessing the whole thing, what it came down to was the customer was not doing proper onboarding. The customer was buying the software. Nothing was happening for a couple of months. They were calling the account executive, the sales reps, somebody to just help them figure out how to configure it, how to set it up. There wasn't really an answer. And when suddenly the team got involved, suddenly it was very heavy lifting, very heavy implementation, and so it became to me, it was very clear to say, like, that's not what it is. It's not price. And suddenly they had spent 3 to 6 months trying to fix pricing, but that wasn't really the issue. The issue was onboarding. And
Mm.
so to me, that's a perfect example where, based on the data and the intelligence and everything they went, they did the whole, get the data from, Zoom calls and Gong, and they were able to get their CSAT and NPS, and they were able to look
Yeah.
at different CS plot. They got all that. But if you don't have the proper data, you're not asking the right questions, you're not looking at it from a different lens, you sort of get caught up into the data the AI is just producing for you. And so you do need a bit of us old guys who can actually be in to think about and dissect a little of the data and just poke at it to make sure that you're addressing the right issue.
Yeah.
Right? I think that's kind of where it is. And so it is a nice balance of, yes, Everybody should be thinking about AI. You should be redefining your customer journey kind of with an AI mindset.
Sure.
And don't just throw pixie dust of AI on top of it. It's like, do a full transformation of the organization. That sometimes um, it's big for an organization or a culture to absorb.
And I think it kind of ties into something else that I know you've been getting asked a lot about recently, which is forward deployed engineers. And I think it was initially pioneered by Palantir, and then OpenAI scaled it for their AI deployment as well. Microsoft have announced that they're doubling down on it last at Ignite 2025. For the audience, can you explain what an FDE is, firstly, and how you're seeing that trade off versus a CSM, and what your recommendations are to people if they are evaluating that?
Yeah, when the new FD dialogue and conversation started happening, the debate around do we need FDEs versus CSMs? Should we get rid of CSMs and bring FDEs? I sort of laughed a little bit because customers are not asking for new roles. I mean, they're not. They're not saying, "Give me a new role, change the title, change the skills, and suddenly that's going to help me get value, get business outcomes of your product." That's not what they're asking. And it's interesting because back, I don't know, 15 years ago, I had a team inside of our professional services team called services engineering. And this was to help our customers customize the product a bit because the product team had other priorities when it came to the roadmap. So we started doing this sort of customization to the product. Everybody was asking. We packaged it. We actually created it into a services product. And so we
Mhm.
actually had a team doing this. And so every time the sales team would sell this specific product, they would attach sort of our services offering. And who would go do this is the services engineering team. So the whole concept of an FDE, it's not necessarily new. And it's not for everybody. I think it really comes down to kind of the point that I made earlier is you got to ask what do your customers need? The product complexity. How are you thinking about it, right? Is it the first mile or the last mile, or however you want to think about it? But in many cases, especially AI is driving a lot of that, right? Because a lot of the AI models are not 100% there yet, right? So the AI companies are like, they're rushing to get the product out. And typically, when they build sort of the framework for their agents, you still need to go tailor it for that organization. So you do need someone technical to kind of help you get there.
Yeah.
But that's not for everybody. If you've been a company that's been around for 20, 30 years, and yes, you're adding AI modules, but you're still kind of the traditional basic business application, you may not need an FD, you may need CSMs. And so the question is never just one or the other. It really depends on customers, product complexity.
Is your sense that the FDE has any chance to completely kill the CSM position?
I would be very bold to say that I think they both are still going to coexist. I think certain companies that are more forward thinking, more forward looking, more like in the AI space, like OpenAI or even Anthropic for that matter, they might think about using more FDEs than CSMs because CSMs are more the traditional account managers, right? They're focusing on upselling, relationship based. Some companies like Salesforce do have, Salesforce functional experts playing CSMs, but if you're in more of a technical infrastructure platform where, it's almost like you're giving them all the recipes to or all the ingredients to make that perfect lasagna, you still need sort of that cook to come in and help you show you how to do it and build it for you the first time. So those may require an FD. So I think there's always going to be a coexistence. It's never going to be just one or the other. I think there's always going to be an opportunity for one and the other. And then obviously, depending on the product of the company and the state of maturity, that you may require both.
Yeah, makes sense. When you think about the CSM position, and you mentioned there about upsells, cross sell, account management. If there's operators or CEOs listening that worry that they might not have the right type of skills in their CSM team for upselling, where NRR can move from 98 to 110 to 120. Do you think you can fix it with training, or do you think it's just you've got the wrong person in seat? Like, what would be your advice there with all your experience?
I think it comes down to, and I get asked that quite a bit, right? Like they're like, we don't think our CSMs are really driving the right behavior, and so you go from they're just project managers. They're sort of this white glove service customer support, or at Google Cloud we were hiring CIO, CTO level super senior people because they were driving not just a relationship, but lots of hundreds of millions of dollars of revenue. So the sophistication, the maturity needed to be there, as well as the credibility. So for me, I think the way I always tell them, I say, look, and people don't like the answer, but it is what it is. It depends. It depends on your product and what your customers expect of a CSM, right? Our customers are already somewhat sophisticated when it comes to customer success. I've been on calls even before working with PE firms, even when I was working at different companies. They would ask the question, okay, I know that, John, Lisa over here are my sales team. Where's my customer success manager? Can I meet them? And so customers are more sophisticated. They're expecting to have somebody who's going to help them post sales to kind
Yeah.
of drive and be their advocate internally for our organizations. They already are asking. And so to the question is, sometimes it depends where the CSMs come from. If their traditional world was they were support folks and they were support engineers and they moved to more a CSM role, they typically are going to address how they drive value to customers through support tickets because that's what they know. It's okay. It's
Yeah.
not wrong. It's just that's just what it is. And then some of them, are you have some sales reps who move from there to being CSMs because they love being in front of customers. Well, guess what? That CSM profile is going to turn more into very commercially focused, good account relationship. So there isn't a right or wrong. It's really more like what do you really need and truly assessing that. So you don't start with what kind of CSMs, you know, do we get rid of them? Do we hire new ones? Do we train them? It's really more like depending on your product, depending what's expected from your customers, then you define the organization to say, okay, what are the skill sets that we need? As
Yeah.
well as what is the mindset that you need on those folks. Because then we can then figure out, okay, do we train them? Do we hire different people? Which segments do they cover? So there's definitely a kind of understanding first sort of the profile of your customers, the product complexity before you determine which CSMs you really want.
And based on your work across portfolio companies ranging in size, like what do you think is the inflection point? Like if people are listening going, wow, I've not really doubled down on that specialism within the business from a leadership standpoint. When do you think post-sales maturity is just a non-negotiable? Is it 1 million? Is it 10 million? Is it if you're churning, if it's based on renewal rates? Like what's the moment?
Yeah. So there's two answers to that question. I think number one is like if you just need if you force me to give you an answer, I'll give you sort of the framework or the range of revenue kind of ARR model where you really start thinking about it, right? The 3 to 5 million is when you start thinking about like, oh, I need something. I need something who's gonna take care of our customers. When you get to the 10 to 20 million, which is this is the true gate of, uh-oh, it's not just I need something. I need a function. I need a function that wakes up every morning thinking about our customers, the customer journey, how do they drive adoption, how do they drive usage, like the entire sentiment of your customers. And then you get to the 30, 50, $100 million is like, okay, we have a function, but now I need to figure out how to scale. We actually need systems. So those are like again, if you're forcing me to give you sort of the gates, is 3 to 5 million, I need something, 10 to 20, we need to build something, 30, 50, and higher is we need to figure out how to scale and kind of go from there. But I don't think that is truly the only single moment that as soon as you reach that, you got to do that. I think there's some patterns you need to start thinking about, right? You need to start thinking about signals, right? If your churn rate starts creeping up, even just a little bit, right? Because especially if you're a startup and you're growing your business, but suddenly you start seeing customers that you're losing customers to competition. You need to start asking yourself the question, do I need something? If your concentration of your revenue is only like in 10 customers or 20 customers, right? You don't have a broader kind of think of it as a diverse, sort of a different portfolio, right? When you're investing your money, they always want you to have diversity in your portfolio, big growth stocks. And same thing when you're running a business. If suddenly your entire revenue, 50% or more of your ARR sitting with just 10 customers, 15 customers, you need somebody to take care of them. Somebody needs to monitor their health Somebody needs to manage the escalations, need to kind of be part of that. If your expansion revenue stalls, despite of like the new logo growth, so you can be growing customers, but the revenue in your existing base, going back to NRR, if your customer base is just sitting there flat, it's not growing, no additional use cases. Maybe they're not attending webinars. They're not even responding to your own team. Like, well, those are risks. So the revenue is a threshold. They're gates for you to think about and consider. But I would also need to be smart because you have to start thinking about what are the right signals. Your support ticket volume is going up. Is it faster than you're gaining customers? Well, that's a problem. It could be a problem with your product. So there's definitely a lot of things to think about. There's the revenue gate, but there's signals that you got to think about that ultimately drive decisions, right? I'm,
Yeah,
I'm, I'm a big believer that I think that the customer data that all of these companies today, and obviously our AI companies today, are able to bring, pull together, give you the right sort of signals, not just to protect churn, but drive incremental revenue is critical. And I think that's where the AI companies today, I think, are doing a good job. And so I think that's when the smaller startups need to think about, right? Look for those signals. Don't just think that as soon as I reach this milestone, okay, I'm going to go hire my first CSM. Well, no, you might be losing customers a year ago,
yeah.
and you need to start solving that problem immediately.
And you said there about like an example of webinars, they're not engaging with the content maybe being produced by marketing. Um, I read that businesses typically spend less than 5% on customer marketing in comparison to net new business marketing strategies. Do you think customer marketing is important? And I think I know the answer, but I need to ask it anyway. And what have you seen work best? Like how, when is it done really, really well?
Yeah. I I I've always said that, actually, I was just having a conversation with a CEO earlier this week, and we were having this specific conversation around marketing budgets. And to me, the conversation is not the let's go give marketing another 20% of budget to take care of the customers. It's like the same tactics that you're using to drive pipeline, to drive growth, top line growth, new logos, is probably the same type of marketing campaigns that you can use to drive retention, to drive renewals. And so traditionally, you've always had marketing part of sales. Marketing focuses on driving pipeline, driving the, basically attendance to webinars or creating customer events. All these great golf outings, we've been able to attend is produced by marketing. Great, but I can tell you the same tactics that you're using for that around, you know, business cases, referenceability, what's actually happening, you can just pivot slightly and use the same budget. It's more the rather than being 100% for new logos, make it 80% and just use 20% to help customer experience. Because otherwise, in the roles that I had, I was constantly trying to create my own marketing team or trying to go steal the ideas from them or go try to partner with them so they can see the value that we could bring. And in many cases, customer experience can actually drive great pipeline for them because we can actually show them like, hey, this is the value that they got out of the product.
Yeah.
And so I think, yes, marketing can be a secret weapon to drive retention, to minimize churn. And some of the data that the customer experience team is able to gather can actually feed into what marketing does to drive better pipeline. So I think it's a synergy that is not either not well understood or sometimes just not well utilized. I truly believe that it's underutilized.
Yeah, yeah, 100%. I think there's some great points there. Um, Now, I guess one of the final questions I have is that in businesses that are struggling with NRR and it's going down and it's going down, and there's just this general feeling of, oh my goodness, is it AI that's like AI, fast growing companies that are taking my market share? Is it my lack of product innovation? And it can create quite a toxic culture, I could imagine, and really like what the business does and who's responsible and who's to blame. In your role as an operating advisor, if you go in there, how do you earn trust and how do you think about building equity within the different functions of not only the CS team, but the sales team, maybe the product team, the leadership team, whilst also dealing with the dynamic of the fund that you're representing? Like, what's your approach to that, Carlos? And what advice could you give to those that are maybe in a similar position?
Yeah, I would say 100% of the time, maybe 99% of the time, you're introduced to a portfolio company through the PE firm. So, I mean, right off the gate, you already are coming in as in, uh-oh, you know, our private equity firm is introducing sort of someone else who come in and help us. And so there's already like an immediate assumed threat right away. Like, no matter when you start. And so for me, it's a really, I think trust is probably the best currency you have. Right. It's about the one thing I always sort of come in with a mindset of this is that this company was successful before I got here. And also what worked at Google or SAP or Salesforce may not work for them. So being more of a listener, so this is advice for other operators because I do share some of this with them too, is that just listen, just be curious, just understand. Because I think too many people make the mistake, especially operators who've been doing this for 30 years. They're like, I've been doing this for 30 years. Let me tell you exactly how it's done. Like, that's not typically how it works. Right. And so just listening and you can relate to the problems and to try to stop from giving them the answer. Right? It's like sometimes, like as soon as somebody starts speaking, I'm like, oh, I already know the answer. It's in the back of my head. But the more you start digging into, it, you're like, oh, but that may not work there. And so just listening, doing more listening than talking. I think respecting their journey of where they've been. It's not like they, became dumb from one day to the other. That's just not how it happens. Just things evolve, things change over time, dynamics, the economy, and like just so many different things. AI disruption. So learning about how they do things, earning trust. And I think the sooner and quicker you can get there, and that you're not there to replace them, you're not there to take their jobs, you didn't come in to cut 30% of their stuff. That's at least if anybody asks me to do that, I'm out. That's not why I
Yeah.
was brought to this world. And so if anybody even asks me to think about that, I step out. That's not what I do. But if they want me to come in and help mentor, guide, advise them around, hey, this is what you're doing today. Let's either validate the things you're working, like, hey, those are going to work, those are great, or you know what, let's tweak this a little bit. And so the moment that those folks on the portfolio company understand that I'm just there to help them, the sooner that we can actually begin to have, true impact, like meaningful impact. I think too many, I've seen it, too many advisors come in with, I have all the answers. I've done this before. I've seen it before. And it's like not every company is the same. And I think always being respectful and listening to them is at least what's worked for me. I don't. It may be naive, but that's just what I do.
No, I not at all. I mean, with your background and experience, it's definitely great advice. And look, I think Carlos, it's been such an interesting conversation. I know you publish articles as well quite prominently. How do people find you? Is LinkedIn the best place? We can share the link in the comments. Is that the best place to find you on the internet?
Yes, I was actually also told to get my own Substack sort of, profile and to start posting there too. So yeah, LinkedIn is probably the easiest to connect. Yeah, and I'm always open to, anybody who wants to talk further about these things, especially for the folks who are making that transition from an operator to an advisor. It's not an easy journey. It's not for everybody. But if anybody's interested in learning more about that, I'm happy to do that. And if there's PE firms out there that want to learn more about it, I'm happy to talk with them as well. It's an incredible time right now for the P world, the private world. There's 5,000 P firms in the world. It's incredible,
Crazy. Yeah.
and the amount of money being spent on customer experience as well is it's critical. And by the way, it's not just a technology play, right? I mean, even if you're selling chairs, you still need a customer support organization. And so now they're tech-enabled companies, they're selling chairs. So, sort of something like what I do, it's sort of expanded beyond just the software space or technology. It's like you're looking at industries that maybe they were never, thought of before. So it's super exciting.
Yeah, I love it, and you are doing work across the globe as well. Obviously, I'm in London, but you're heard you're supporting funds in Europe, South America, North America. So you really do have that global experience, which is great to for the funds that are listening to know about as well.
Yeah, there's quite a bit of PE firms out there in Latin America that I've started to connect with as well. So that's been very interesting. Suddenly my Spanish is coming into play, which is also super good. But yeah, it's fascinating. I think being in a global role is also very interesting, or having had global roles is very interesting because I can help PE firms that have global presence because what works in the America, in the US, doesn't mean that it's going to work in London and Paris and other parts of the world. I mean, you have different cultures, you have different currencies, monetary behaviors. And so understanding that is so super important. Too many PE firms or too many operators make that mistake that, hey, because it worked in California, it should work everywhere. And like that's not also how it works. It's like you have to be thoughtful of the culture, the currency, the language. In some cases, it's you have some folks in Italian who they don't want non-Italian speaking CSMs. So how do you address that? So like just being respectful of culture is also super important.
Yeah, love it. Well, Carlos, thank you so much for your time. It's been a great conversation, and yeah, love speaking to you. So thanks again.
Thank you, Stuart, for inviting me. I appreciate it.
Thanks, everyone.